So in this series, I'm going to show you how to use only pure price action and no other. Basically, this is the old way of trading where we will be trading based on price action only, looking at the charts. So in this, what I use is I use the 9 EMA, which is in red color, and the 21 EMA. So this is kind of a breakout strategy. So what I'm looking for is, firstly, I'm looking to make support and resistance, and this is dynamic, like we will be making it when we see it on the chart. So let me add it. So for example, if we see here, right, if we see here, this is one support and this seems to be a resistance. So if we are going short, what we are looking for is, we are looking for the market to come down. And apart from that, so if you'll notice here, it did come down. So this candle, the red candle, broke the support, and at the same time, the red moving average, which was a faster moving average, was below the blue moving average. So everything was correct, and we can take the entry at the closing price. So generally I don't take the entry at a breakout, I will take the entry at the closing price. So that will be my entry here. So I will take the entry here. This is a selling entry. Now I can have two kinds of stop losses here. One stop loss obviously is a more logical stop loss, which is the previous swing high. But if this is too much, in this case, this is almost 60 points. In that case, what I will do is I will keep the high of this red candle. So it depends. If the candle which is breaking is a big candle, so something like this, because this is almost, if we see, this candle is almost about 20 points. So if it's a bigger candle, then I'll keep the high as a stop loss, and otherwise if there are small candles which break it, then I'll keep the previous swing as the stop loss. So that is my stop loss, and I would generally trade it with at least 1:1.5. So that will be my risk to reward. So if my risk is about 20 points, I'll go with reward of 30. So 1:1.5 is my risk to reward. So in this case, you'll notice that we would have gotten an exit somewhere here. Let's take a couple more examples. So if we see here now, see, so this is my swing, and the time when it's breaking, at that point of time, if you notice here, this candle, at that point of time, the moving averages are still not in the correct order, because at this point of time, the red moving average is not actually above the blue moving average. So I will have to skip the trade. So I will be skipping this trade. Again, if we see here, this is a time then a place where we can go for an entry, but the problem will come if we take an entry here, is that you have a very high, very big stop loss, right? Very big stop loss. So what I want is, I want the previous swings to be, so basically the resistance and support to be closer. So something like this, what we saw earlier, the swings were pretty close, the resistance swings and the support swings. This is what I want. If the market has been going in a single direction, then it's coming down, then I'm probably not getting a great entry, so I will skip this trade. But as I said, this is a lot more discretionary trading. So essentially what we are looking for, if I can write down all the rules, let me just write down all the rules, is firstly, I want, when the first step is, I want the resistance and support to be close. So that means some kind of a consolidation is happening. Then when I'm going for a buying entry, I want the candle to be above both the EMAs, both 9 and 21 EMA, and at the same time the 9 EMA should be more than 21 EMA, and I will take the entry at the closing price. So I will enter at the closing price, and once I've taken the entry, I will put my stop loss either as the previous swing or the low of the candle, depending on how big the candle is, and I will take the target as 1:1.5. So this is how I'll be trading this strategy. We can probably check a couple of examples here. So again, see, this is what I'm looking for. So I'm showing you Axis Bank now. So this is a kind of a good consolidation I can see, a good consolidation that I can see here. And similarly, if I see at the bottom, this was a good consolidation even at the bottom level. Okay, so if I notice, I would have taken an entry. If you see, if I would have taken an entry here, but again, this is a very big candle. If you see here, it's a very big candle. So because of that, I might have to skip this trade. I might have to skip this. Otherwise, it would have been a good trade. I mean, it would have obviously hit a stop loss, but I would have taken a trade here. But this is a too, the candle is too big, so I'll probably skip this. Then if you see here, this is a candle where I'm again getting the entry. This candle is where I'm getting the entry, because it has broken a long set of resistance. So I'll probably take this entry with the 1 is to 1.5, and I'll put the stop loss as the low of the candle. And in this case, probably my stop loss will get it. Probably my stop loss will get it. But this is a good setup. Overall, this is a good setup, because what I'm looking for is this kind of a small narrow range happening, and then a breakout happening along with the EMA. So this is how I'll trade this strategy. Thank you.